Good afternoon, everyone, and welcome to our first webinar for 2018. My name is Gavin Tiefel, and with me on today's webinar is Jonathan Tiefel. Once again, it's great to have you all joining us today. Streamlining of the end of period close is critical to every business owner. This is evidenced by the interest we've had in this webinar. There are close to 100 of you joining us today. Streamlining the end of period close is the catalyst for timely and accurate reporting, which is a must-have for any business. Timely and accurate reporting leads to well-informed business decisions. I'll now hand over to Jonathan. He can run through what we're covering in our session this afternoon.
Thanks, Gavin. So there's three key areas to streamlining the end of period close, which we'll be focusing on today. Firstly, roadblocks to timely financial reporting, some examples and how to identify them. Secondly, how to build an effective close process. We'll demonstrate this using some real life examples, and finally some practical tips on how you can speed up your end of period close. So as always, we really value your feedback. You'll see a feedback form pop up at the end of today's session. If you can fill out the form, we'll make a copy of today's webinar available to you. I'll now hand you back over to Gavin, and he'll run through some roadblocks to timely financial reporting.
Okay, so what are the roadblocks to timely financial reporting? These can be broken down into 6 key areas. The first is suppliers. We all have that supplier that's always dragging the chain, not issuing final invoices until well into the next month. This drags out the end of period close. We may have everything else ready to go, but we're still waiting on company A who issue final invoices on the 5th day after, or company Z who issue theirs on the 6th. The second roadblock is stock or work in progress. We all know what it's like. We have a warehouse full of stock. It's one thing to have to count it all up, but then we must value the different products, which is very time consuming. Add to that all the errors and glitches in the system that must be fixed up, and the process takes forever. With this approach, the stock figure can take days or even weeks to calculate. The next roadblock is issues relating to capital expenditure. You may have sold an item of plant, say a vehicle, and may have purchased a new one. Let's say it was a trade-in deal and you utilised a chattel mortgage or a hire purchase for the changeover. There may have been a string of transactions as a result, and no one is sure how they should be treated in the accounts. This procrastination leads to further delay in the end of period process. The fourth roadblock is systems. It could be that you're running some older software, possibly on an older computer or server. This inevitably leads to slow functionality and possibly a lot of manual entry, which newer systems would most likely have automated solutions for. A part of this roadblock can also be that you may not have yet entered final adjustment journals for a prior period. And if this isn't the case, it has to be done before the current period can be closed off. The fifth roadblock is expense allocation. It could be that there has been some expenses during a period that are a little bit outside the norm. Procrastination over this again is going to cause delay. The other delay from expense allocation is that management may wish to drill into each account to ensure that expenses are allocated correctly, which is fine and it's important to do, but it must be done in a timely way to ensure that this doesn't add further time to the end of period close. The final roadblock is reconciliation. Time is often lost in performing bank reconciliations, especially if there are a lot of transactions to be entered. This may even be delayed waiting for the bank to issue statements, and possibly further delayed if there's an error in the reconciliation, which may require further investigation. So how do we build an effective close process? And to demonstrate the point of this, I'd like to hand over to Jonathan to run through a case study.
Thanks, Gavin. So to further demonstrate the close process, we'd like to run through our first case study. So this is Joe. He runs a successful business. He cares a lot about his finances, but is constantly having trouble getting reports in a timely way. So we want to drill down and have a look at how Joe's end of period process works. He's closing off January so he can obtain his financial statements for the month as soon as possible. So for the first few days, nothing really happens. Joe's getting over the whirlwind of the month and is busy pushing orders out the door. He doesn't have time to think about the enormous task of the stock take, and he knows that there are some suppliers who are still yet to get their final invoices in. Meanwhile, Denise in accounts is very busy processing final invoices for the end of month and issuing statements. The next day, Denise is doing the bank rec, but is still waiting on Joe for the final bank balances, which she'll keep chasing up with him. Joe hasn't got this to her yet because he's just started work on the stock take as well, and as we said, he likes that to be accurate, so he does a lot of this himself. This takes him several days, and finally he finishes counting stock, and he sits down at his desk to value that. The valuation takes him a few days to complete, along with everything else he has to do, partly because his system is slow and it's taking him a long time to access the relevant information. Towards the end of this process, he identifies a few issues in the way stock quantities are being reported, and he needs to ask the storeman about this. He has finished for the day and will be back on Monday. So meanwhile, Denise has been entering all the bank transactions into the system. On Monday, Joe gets a chance to discuss the stock issues with the storeman and completes the final stock valuation. He then needs to enter the updated stock valuation in the system, and this process can finally take a few days to action. At this point, Denise has everything done from her side apart from 3 transactions, and she's not sure how to handle those. These relate to a refund from an insurance policy, also some transactions around the acquisition of a vehicle. She finally checks with Joe as to what she should do here. He isn't sure. So at 4 p.m. on that day, she emails a question to the company's external accountant and finishes up for the day. The next day, the company accountant replies, and Denise is able to finally reconcile the last items, and she leaves it with Joe to cast his eye over the expenses for the month and make sure they're all correct. And Joe's pretty busy, so it takes 2 days before this is finally complete. Joe confirms that everything's okay and instructs Denise to forward the files to the external accountant. So the big reveal, when we look at this and consider the number of days it's taken for each step and allow for the weekends, Joe's end of close period will be finalised on the 27th of the next month, or after 19 working days. So really we're looking at 4 weeks later. Now in contrast, we have another case study, John, a bit more positive, and I'll hand you back to Gavin to tell you about him.
Thanks, Jonathan. So John is a person who has an effective end of period close process, is using effective and efficient systems. And this is how the month end process plays out. Again, we're using the same month, which will say is the month ending Thursday, the 31st of January. And that's a period being closed off. So on the first day, which is the 1st of February, John knows that he needs to put aside 1 hour to look at his stock report from their system. Their stock is kept on a rolling stock basis. So once the last shipments went out on the 31st, the stock that was showing on their system was reasonably accurate. Not perfect, but okay. Also on the first day of the month, as far as internal accounts go, John's accounts person, Graham, has reconciled their bank, which only involved transactions for the 30th and for the 31st days of the month. This is usually done daily. They utilise cloud-based software, which the external company accountants also have access to. The software also allows customer statements to be generated and issued electronically, which he has done. And this is a fast process requiring only a few mouse clicks. There is, however, 3 transactions which Graham isn't sure what to do with, as these relate to the acquisition of a new truck. The other issue is that there is 2 suppliers that they haven't received invoices from yet. So they asked their purchasing officer to provide some estimates of the amounts, and he's calculated that the amounts owing would be, say, $7,000 from one company and $5,000 from the other. Graham has entered these amounts based on the purchasing officer's estimations. On day 2, which is the 4th of February, John examines his stock report and he identifies some minor adjustments that are required. He enters these into the system and informs John that the stock in the system is correct. Graham then exports a detailed listing of the expense accounts into Excel. John has looked through these and is happy with the way the expenses have been allocated. So on day 3, Graham completes the checklist for their external accountants and forwards the relevant information. He also sends documentation for the purchase of the new truck and asks their accountants to allocate these items correctly because he's not sure how to allocate it. So by day 4, their close is complete and their external accountant is underway preparing the financial reports for the month of January. So what we can see here is the difference of having implemented an effective close process. One completes the close of several weeks before the other, and it's a combination of having a mindset to execute the close quickly. The team is engaged in the process and their systems are working effectively in doing this. So there's really 2 key challenges that I'd like to put to everyone on today's webinar. And these are, firstly, what would you have to do to close off by midday on day 1? Now, there may be many reasons why this isn't possible, and most likely it isn't, but still, brainstorm it, get buy-in, come up with all the ideas that you can internally to make this happen. The second challenge is to pick a day. Pick a day and work back. So in the first example we went through is a classic example of working forward to your close off. So there's always going to be distractions and things cropping up, which will be pushing out the close further. So what you need to do is to pick a day that your close off is going to happen, come what may. So let's say, for example, we're going to pick the 5th day of the month. So you work backwards to achieve this. So that a certain task is achieved by day 1, by day 2, something else is achieved, something else always happens on day 3, so that all required tasks are completed by day 5. Placing a deadline on this internally is the only way that the close will happen in the required time frame. So what are the practical tips to take away from these examples? Well, firstly, start before the period ends. There's so much that can be done during a month to prepare for your close off. Use modern automated systems, reconcile bank accounts daily. This leaves only a day or 2 to be reconciled before close off. Also, constantly updating and monitoring stock throughout the month takes a lot of pain out of the calculation of a stock calculation and speeds up the process significantly. Look at your own close process and work out what can be done ahead of time to speed this up. The second tip is to explain this to the team, the importance of a high-speed close-off. It may be necessary to change the mindset of staff members involved, but it's important that staff support you in this process, they believe in the cause and help you as a business owner in achieving this goal. Of course, it is necessary to lead by example in this. As a business owner, don't be the cause of delay if there is something that has to be completed by you. The third tip, and this really ties back to the previous point, but it's important to spread the tasks for a high-speed close around the team. Say, for example, maybe a storeman could be used to verify the stock take. Purchasing officers could be used to estimate the value of an invoice that may not yet be received. And possibly administrative staff could be responsible for getting all information to external accountants. If this all relies on one person, the close process inevitably will be further dragged out. The fourth tip is to iron out problems. Brainstorm and ascertain what the biggest barriers are in your end of period close and find a way to overcome them. For example, if it's waiting on supplier statements, maybe consider paying from invoices on a regular basis, say weekly. This is actually better for your cash flow, and at the end of the day, why should you be reconciling invoices to statements? It's your supplier's job. Try to think creatively about how you can overcome the big hurdles which usually relate to suppliers or work in progress. With that, I'll hand over to Jonathan to go through the remaining 4 tips.
Okay, thanks, Gavin. So tip number 5 is make technology do the work. So in the case studies that we looked at, a lot of the difference was between the 2 businesses was in their systems. So cloud software with automated bank feeds makes very light work of bank reconciliation. Cloud-based programs mean that there's no delays with software versions or updates, and programs like this can be accessed from any device. So at a practical level, it makes interaction with external parties such as your accountant much simpler. For example, if there's a transaction which is unusual or complex, you can simply ask your accountant to log in and address this. The other point with technology is to make sure you have good, reliable, and well-maintained inventory programs that are a good fit to your product range and business, and make sure they're being constantly updated and refined. And if you work in a project-based industry, there are programs that are tailored to produce accurate work-in-progress calculations and produce them quickly. So utilization of systems is very key to achieving a fast close. The other thing that needs to be done is materiality needs to be managed. So by materiality, we mean what is an acceptable level of variance or estimation where required to execute a fast close. Inevitably, some estimations will have to be made, as we saw in the second example. There was an estimate that had to be made on the value of some invoices that hadn't yet been received, and this is reasonably common in a fast close process. So the extent of this is something you have to look at in your own business, and often varies a lot depending on the size of the operation in question. But as a general rule, the way to approach this is to consider what will happen if the estimation is incorrect. Will it distort your GP or net profit percentages? Will the result be a report that can't be relied on? So there's 3 points to consider when thinking about materiality. One is to always err on the side of caution. Secondly, history is a great teacher. So you know your business well, and you can always look back at previous periods as a base for any estimations or assumptions if they need to be made. And lastly, estimation, not procrastination. So always remember that accurate reports now are invaluable in comparison to perfect reports that are out of date. So point number 7 is you need a process. All these points need to be documented in a step-by-step process. This should be detailed and shared with relevant personnel. It should name the team members responsible for the different areas in the closing process, and also the days into the following month that they need to be completed by. So it's a good idea to present this checklist in a checklist format so that you can visibly see what needs to be done, what's been done, and what you're still waiting on to complete. It's also a good idea to discuss this with your accountant as to what should be included in this checklist, and also how that ties into when they're scheduling your reporting being done. And finally, if you're struggling with allocating time and resource to your closing process, consider engaging some expert external help. So an obvious solution here is to engage a bookkeeper to help you with your accounting system. And as we mentioned, timely and accurate reporting is critical to business decisions, so it's bound to be a solid investment. At the same time, it could potentially free up a lot of internal capacity to focus on less cumbersome and more value-added tasks. So it's for this very reason that last year we launched a full premium bookkeeping service, Connect HQ. We launched this to our existing clients and also clients in the broader business community. And we recognised that clients needed a well-maintained financial system without the headache to committing to additional internal resource. And that's resonated with the clients of Connect HQ, and we're now reconciling hundreds of transactions every day and bring more and more businesses to faster and faster end of period closes. So some of the benefits of the Connect HQ service offering include a daily bank reconciliation, which is an industry-leading level of engagement. This is carried out by an expert team of highly trained bookkeepers and cloud consultants that are all set to simplify your processes and drive internal efficiency. And we do that by sharing best practice and ideas across our client base. And all this is done with a fixed monthly fee that's with no locked-in contracts and a pricing model that can scale as your business grows. And another attractive thing about the service is that in every client we've engaged to date, the services we're providing have ended up a more economical option than hiring additional internal resource, even though it's being carried out by fully qualified accountants. So You'll have the opportunity to request more information about this service in the feedback form at the end of today's session. So if you wish to receive more information, one of our team will be in touch. There will be no obligation following this discussion, but would recommend just having a chat with them anyway and getting some ideas you can action in your business specifically if you're not ready to engage a bookkeeper at this point.
Thanks, Jonathan. That brings us to the end of today's session. So to recap on what we've touched on today, we've learned what the main roadblocks are to financial reporting. We've learned how you can build an effective close process. And we've also shared some practical tips on ways to speed up your end of period close. So I'd like to thank every one of you for joining us. We've enjoyed having you along. Please don't forget to leave us some feedback. And until we connect again, goodbye and thank you for joining.